Are you surprised by this?
This is something that we were actually just discussing today, that typically, basically what we're seeing is that Janet Yellen is doing her job as the Fed chair. She is the grown-up in the room that's saying, look, there are global growth concerns, but as of right now, the U.S. recovery is ongoing.
So everybody just calm down, take a breath. We still see our indicators, and they're showing that, as opposed to all the other economies around the world, we are still showing signs of strength.
Exactly. And so those exact comments are what will probably permeate the statement for the October meeting when they meet later this month, that despite global growth concerns or roiling in financial markets, the U.S. recovery is on track.
Michael McKee, this story that Bloomberg is breaking now says that the people who asked not to be identified because that meeting was private said that Chair Yellen told the group of 30 that the economy looked to be on track to achieve growth of around 3% going forward.
Yeah, I don't know how much I'm going to read into this particular statement, Mark, because it was made last weekend before the Group of 30, which is a group of influential senior former financial officials chaired by Jean-Claude Trichet. They're meeting on the sidelines of the IMF conference. Janet Yellen and other central bankers speak before that group, and she basically gave the Fed party line that we expect 3% growth and we expect inflation to gradually come back to 2%. Now, that's very similar to what the Fed's forecast is for growth of 2.6 to 3% going forward, and inflation of 1.7% to 2%. So she's talking the Fed's party line. Where it may be significant is in the context of the minutes that came out about 10 days ago when the Fed was quoted as worrying about developments in foreign markets, and that set off a whole chain reaction in financial markets. So the fact that she's still hewing to the party line here is important, but this is not a direct reaction to anything we have seen this week in the markets.
And Ellen Zentner, is that party line enough to calm the markets at this point?
Well, it depends on the context and if markets just dismiss those comments or not. Our thinking was that, look, Janet Yellen speaks on Friday. She speaks on Friday about income inequality at a Boston Fed conference. Now, that's a prepared speech, but she could easily, if market volatility continues and markets don't look to have found a bottom by then, she could easily have a few prepared remarks right before beginning that speech. And that is what we had expected her to do. It is her job as the chair to step in and say, let's all calm down. She's seeing the same thing we are. There is no coincident data on the U.S. economy or forward-looking data yet that says, look, these global growth concerns have started to affect the U.S. economy.
Michael McKee, we are seeing a slight uptick in the markets right now. These comments from Chair Yellen, does that give a sense of urgency to what Fed policymakers now have on their plate between now and the end of this year? If the markets continue to fall, it makes their job a little bit more complicated because they have to assess the feedback loop of the markets into the economy. But when you look at the other things that have gone on, the drop in oil prices that should be overall a boost to growth, the change in the value of the dollar, there are some reasons to think that they might be more concerned about how fast the economy could grow in the long run as long as inflation comes back up at some point. And that might happen if you continue to get strong job growth. So while it's more complicated, it isn't something that they need to step in immediately and do. Yeah. We got the law of large numbers going on with the markets. You get a triple-digit move, and it seems like a lot. But the markets are so high now on a percentage basis. It's nothing like back, say, in the 1990s when we saw a 500-point drop in the Dow and and Alan Greenspan at the time and Bob Rubin had to get together at the Treasury and support the economy and talk about how strong things were.